All right, y'all. What up? Market's open. Let's go. Hit that like button. All right, let's see if we had a patch rollout last night, everybody. Smash that like button, friends. Hit it, hit it, hit it. I'll be doing some live trading today. I'm kind of back at my challenge going on here. See if liquidity maps to print up. All right, cool. UVXY came in. Looks like the new patch came out last night fixes the liquidity map display problem. Perfect. I love it. Okay, good. All right, so we are staring at Universion at the open. Hedge pressure break right out the door. Hold on. Yeah, non-actionable. Yep. Not bullish, not bearish. What it basically means, the market's kind of liquid and just trucking along. We did open below hedge pressure both in QQQ and SPY. That is a gamma negative position on, or negative gamma position for the option sold to dealers. That's what our technology is. We look for that. And when you have that negative gamma, it just creates a wave to the downside. So today, QQQ has 360 as resistance, right? And that is that hedge pressure level. And SPY itself, I just lost sight of that. It looks like it is right at 432.5. So today I'm not taking any, I don't short when markets are balanced like this, but I will take breakouts if we do break those levels and clear through them. If we do break 432, I'd be more willing to long to maybe 435 on SPY, but I'm going to call it pretty quick. I'm not looking for breakouts. It's a very contained day today. We're probably going to retrace, probably fight all day to retrace a little bit of what we lost this week. I don't see any downside moves. DD comes in at 95% of the stocks are trading in a bull zone still, market cap that is. So markets are still nice and clean and bullish-ish. So I'm gonna be looking for those breakout plays to buy. I'm not gonna chase shorts though, and I'm not gonna chase green candles until it breaks. Hey, I see Sim. What's up? I saw you step up in here. You got anything going on this morning? Sim. Are y'all? Nothing day today. I love it. Okay, let's take a resilience. Resilience is positive and looking good. Let me get rid of monthly hedge pressure on here. All right, y'all, you're ready. Y'all, smash that like button real quick. I might make some trades today. Although we already hit DD band in NASDAQ. I already tapped the upper DD band. I'm not really sure if I like what I see to take anything aggressive. No clear signals today. I 100% agree. Like button, smash it, everybody. Let's go. I'll write my analysis as soon as we get there. Where's my pencil not working? Ugh. Come on, pencil. Where you go? Oh, my pen isn't working today. Y'all gonna have to use your imagination. Hold on. Let me kill the process and open it back up. All right. If we break, which is an if, we trade up to DD band, right? Wherever that is. Or mean reversion, it's going to want to migrate to the middle. Ashton's talking about that right now, actually. So liquidity map's going to take us right to the middle. If we break, I'll trade a DD. Anything below, I'm just going to ignore. Okay, plus also notice the upside is limited because we're going to have a VIX response to 1550, bull zone bottom. We know how that works. So VIX, if we go up just a little bit, we're in that ticking time bomb where VIX could go off and the market could start selling early. Okay, I love this neon pink color. That's kind of cool. Okay, let me start over. If we break hedge pressure, we start trading higher, which causes VIX to trade lower. And the minute you hit bull zone bottom, we know how that alarm goes, right? It is a ticking time bomb that volatility can just come out of nowhere. The highest I'm going to hope for is DD band. So we're going to have a VIX thing and a DD band tap on the best case scenario. And we only have like 15 points to go. Resilience is negative. Obviously, let's look at that right now. So negative resilience, we're trading lower. I'm not shorting this because I know I'm still bullish the market. We're still above monthly hedge pressure and all that. So if it falls, I just let it fall and I wait for the long side. Y'all see how that works? Easy peasy. Guys, smash that like button. I'm going to go take a break real quick. I love you guys. But let's hit that like button. Let's try. I'm eating a Think Thin bar for breakfast. It's really delicious. So the way that I look at it is very simple. In my checklist in the morning, I look at MHP, where bull structure. I look at DD ratio, bullish DD. I'm gonna look at monthly maps. Look at this. We're starting to finally get into the bulls exiting mode. This is new. This is a new development. This is not good, and this is volatility. This could be sell-off market environment coming in the next couple weeks. So not bullish, not bearish, still mean reversion, but not looking hot, right? Ooh, that monthly map. I'm going to talk about it on Spaces today. Map is... It's hard to say. Okay. So in general, it's like when I see it like this, my checklist is saying, okay, things look good, at least on the longer haul. And then I come look at monthly map and I say, or liquidity map, and I look at liquidity map and it shows our mean reversion, which is balanced in meh. We're opening below hedge pressure, which means we're likely to close below hedge pressure, which is meh. If we do break, there's a VIX interrupt along the way up. So any upside is short-lived, and we already tapped the DD band at the top of NASDAQ, means the day's pretty much over. So in all honesty, I will squeeze a very quick long scalp if I find one and it sets up, but resilience being negative, doesn't look like we're going to get it. So with all those competing signals, I'm just going to sit out, let it trickle lower and fall down. I'll take a long on hedge pressure break at any point in time. I'd be very confident in taking a long hedge pressure break. If it fights its way there and falls to bounce to it, I would do that because we would be probably down here on VIX and be fine. And we had the PMI coming out today. Oh, that is right. We do have a news day today. Thanks for reminding me. Look at me not paying attention. I love you. Filters, select all clear. United States. Let's go. Oh, it's the services PMI. Okay, that's right. You've been right at 50 the last print. It's well, in general, right now, as we've noticed with the FOMC's announcement, kind of setting a precedent that the market is just too thin to buffer any selling. Like just a little bit of selling causes us to sell off really hard. It wasn't a lot of selling, it was just a little bit of selling. Today, I know, Ashton, I don't know if you looked at this, the monthly maps in SPY today are alarmingly looking bad. They're finally starting to look bad now. You can see those bull zones starting to flicker up, and that usually means increased volatility and bull side selling. So as it's reflective of what happened post FOMC, it's weird to see that people wait for that event to sell, other than they were waiting for that event to cause a pop so they could sell, and they didn't get it and they just sold anyways. So it tells me that the appetite on the bull side is starting to finally weaken just a little bit. This could just be seasonality. I mean, obviously this is leading into what people look for at this time of year anyways, but it doesn't seem to be strong selling pressure. So in general, I'm just kind of, you know, being cautious myself. Was that your question?
Well, I was mainly asking, like, if this data is perceived bearish by the market, how we're sitting right here on SPY, how would, or what would you expect in terms of this data came in if it was perceived bearish by the market?
Oh, okay. So the perception of it being bearish. So I think the data is going to come in not looking so hot already. The services PMI has been trending down from 55. The last print was like right on the edge of 50. And they have been misses for, I think, the last 3 or 4 prints. This is the lowest forecast that we've seen in the last 6 months, and if it comes in as a miss again, we'll be below 50, and that is that deterioration of the services sector. It's just the services sector, and I know I'm glad Jaguar's here, because he usually has a mountain of data to chat about. And I just think in general, you know, he can pass it on him after this, see if he has any opinions on it. I just think that the market is not going to it's not going to respond well to anything these days. It's very thin and very easily moved. I don't think that particular print or this particular data point is going to create a sentiment change. It actually just came out in the market. 50.2 and a 50.6 forecast. It is a miss. It's still right above 50. I personally think that it's not enough to change everyone's sentiment. I just think everybody right now that's looking to exit their positions, whether it's bulls exiting at profit or bears exiting while upside down this last year, are looking for better places to maneuver out of their position, and they don't really care. It's like if I was a bull and I wanted to take profits after a year of being long, I'd wait for a Fed print to pop the market up for I'd sell. And I think that's what we saw. People just sold because, you know, why would a no rate hike cause the market to sell? It just means it was already priced in and people wanted to sell anyways. So I think the PMI, services, and other catalysts we'll have this week and next are kind of going to be similar. People that want to get out already want to get out. It doesn't matter what these things are. The sentiment's set in stone. That's my long-winded answer, to say people already know what they want to do. And I don't think anything's going to come out and surprise the market. All these prints are going to be exactly what people think is going to happen.
Yeah, appreciate that, Matt. And speaking of Jaguar, I want to pass it over to him. But before I do, guys,
yo, what up, y'all?
If you're listening right now, please drop a follow or
okay. I'm not doing anything right now. I'm waiting for services PMI come out. 50.2 and a 50.6 print. We're sitting there relatively flat. God, it's just like a nothing day, right? Nothing day today. So I'm starting my small account challenge again. I think that now's a good time to start doing this in Rocket Scooter, now that we're in the middle of processing all the optimization patches and sprints that we're doing. I think it's a good time. So today we had a new release, by the way, that everybody know. Sorry about yesterday. We had a few releases that made liquidity maps flicker for a little bit. You had to delete and add it back. Now everything should be good. Everybody, type in chat real quick. Are you good today? Is platform working smooth? Did we iron out those kinks from yesterday? The other bug that was up here was that it wouldn't trigger market open. When I left this open overnight, my socket would disconnect, and it looks like we're good here. Are we good? Perfect. So you guys, listen, every single time we have a day like that, Papa Bear gets another gray hair because I stay up all night trying to fix this stuff. I live my life perpetually on 3 hours of sleep, I feel like. I love you guys. Y'all know that. Awesome, guys. That's when we say this, like, you know that we're on your side and we love you guys and we're gonna do anything we can. If the platform, you wake up one day and we release a patch and something breaks or whatever, you know, we try to test everything on our test server. Sometimes we can't forecast every possible problem because, You know, there's just so many different moving parts. Don't ever be mad or discouraged or angry and be like, God, this sucks. Go to what you get in text. Remember how yesterday you guys rallied for me? Everybody came together. Everyone posted your stuff in tech support. Everybody posted a picture. And you wake up this morning silky smooth. That's our new process. Go there, be constructive, be as descriptive as you can. Do a full screen screenshot. Show us your status. Right here, we can see your connections. And just post a full screen screenshot of what you're experiencing. We'll jump in and fix it. We've got a month of work ahead of us of all these patches we've got from your information from yesterday. So last night, we fixed the liquidity map where you had to delete it, add it back. We fixed the part where it doesn't switch to market open, which again, it looks like I'm still dealing with a little part of that. I'm gonna let him know this. Like, it still says I'm over 2 p.m., which is not true. So that's one part of that. And then the last part is a single date was starting to crash the liquidity map. We had somebody report that as well. When you switch a single date monthly map, you would see that the single date would stop working, and we fixed that as well. It's good. So every day, little bug. The goal of this is optimization month. So as we crammed all of our features in the platform for phase 1, now we're sitting back and polishing it up. It's like that scene in The Wizard of Oz when they're like buffing the Tin Man and giving the lion a haircut. I'm still wanting to make a trade on hedge pressure break, but I'm not really sure if its resilience is strong enough for us to get outside that box. I wonder if I did like a micro scalp. I don't like playing meaner versions that much though. Let me double check that we have micros here. Okay, we have this. Let me double check this. So it's 2 p.m. Is anyone else able to load? Is that just me? Oh, wait, hold on. Oh, wait, never mind. That's me. I'm stupid. Never mind. I typed it in wrong. We do need micro CD band though. That's me. That's so weird. What did I do that? Oh, that's why. That's because that's. Oh, I see. Okay, we need to work on this. This is what's not working. See it come. So that's why. So you know how you usually will have like what we call the continuous contract? It comes up in search, but that doesn't have a candle or anything. So I'm curious what's going on there. Let me go to my watch list. You guys like it? Things are operating silky smooth today? All right. I like this. This is cute. This little pop-up down here. All right. Double checking everything's good here. We do need micro DD bands, so that's another thing we're gonna put in here. Another thing is that on the risk interval, we're gonna make it to where you can modify and edit this. You can remove the tickers you don't want and leave the tickers you do want. Things are open. Okay, cool. I was seeing a possible short side play with DD being, resilience being less than 0, down to there. Obviously, that's what I was thinking. I opened up micros saying I'm probably gonna short a micro just to do something, but I didn't get it up in time. Oh well, that's okay. So this is one of those days where it's gonna kind of let it chill. I'm gonna let it fall, and I'll still take a long side break if we get it, but in all honesty, more downside rather than upside. Oh, they're asking me to do lightning round. Somebody say lightning round. Let's go. All right. So lightning round, everybody. Adam's going to throw me tickers, random tickers. And actually, I know if you want to even spice it up even further, maybe people can type some tickers in the comments below, and I will actually do that as well. Some at the end of your lightning round. Oh, sweet. All right. I was just thinking outside the box. Okay.
I know you're streaming on YouTube and on here, so yeah.
I don't know how I do it. Let's go.
We're ready to go. First ticker, AMD.
All right, AMD. Let's load it up. All right, AMD opening, kind of mean reversion, kind of stuck in the middle. There's really nothing to say about that. It's not actionable. Next.
Let's see. We got Meta.
Hold on 1 second. Let me load this up. Meta. Okay. Meta bull long up seems to be pretty decent. Tech is looking great today. Support side 300 on Meta. DKN DraftKings. All right, let's go. DKNG. So all I'm doing is typing these in Rocket Scooter and running them. DKNG is mean reversion, just like the S&P. It's probably going to be in that similar boat. It's got a 28.75 hedge pressure stuck in the middle, not actionable. At the end of the day, probably past 2 p.m., stocks like these are going to start to move as we load up into expiring options for like 0 days on the index and stuff. I don't think anything's going to happen for this one. Flat to slightly down. Okay, hold on 1 second. That's a BSU setup. That's a resistance off hedge pressure today. It's going to be short out the door from 21.75. There is no real obvious support until about 18, bottom of bull zone. So this is, in general, just going to kind of trade down with the market. I think it's going to be tethered with everything else. So there's no long setup here, and it's not actionable. And there's only a long action off of 21.75 break or 18 support. So this I'd sit out on as well. Most of these are looking choppy and flat to down. Apple, all right, let's go. Apple, oh, lovely. Apple's got the nice, sweet bull long up, but its hedge pressure's at 170, which is pretty far away, 4 points. Not entirely actionable like anything else, and Apple's just chopping in between yesterday's close and today's open, which is keeping Apple kind of sitting pretty, not looking terrible, not looking good. I would watch the Nasdaq, and Apple's probably gonna do what it's gonna do, and since Nasdaq is tapping off, I really don't think that Apple's going to get any bull side momentum, even though it is sitting here with a bullish liquidity map. It's only actionable at the open price, so you'll need a break of today's open to give it some kind of oomph. So about 174.7 acting as support. Apple's got free ride to go as high as it needs to today. But other than that, again, flat and choppy, not entirely actionable. I take the breakout on the 174. 70 support, which is Apple supports at its open price today as a gap and go.
All right, let's do 3 more.
UNH, all right. UNH liquidity map opens bull long up, same as Apple. Is a gap down, filled its gap, or actually, sorry, not a gap down. It's a gap down, so different than Apple. Apple was the gap. Anyways, forget about Apple. We gapped down on UNH and we filled the gap to the upside, which is great. The open price, again, being support, is always decent on what we call bull long up liquidity map. So today, right out the door, if we open as a gap down in UNH, right at 498.40, I would have longed right at the open towards filling the gap because that's what belong up trades are. So it's up today. Tesla, all right. So, and so these numbers that we're talking about right now, by the way, these are printed right at 9:30. Our platform prints all this stuff right when the market opens, and they stay there all day long. Okay, so Tesla is same as Apple, same as UNH. It's belong up. All things are pointing up. The difference with Tesla is that we gapped up and filled the gap to the downside. So unlike, so I guess Apple was a gap up today, I believe, right? Let me look that again. Let me double check. I'm saying that backwards. But Tesla, since it filled this gap to the downside, is a downside play. And the only long off of that is, again, if we break through the open. So anytime, actually, so like today is an example, going back to Apple, we gapped up and now we're supporting at the open for that bull side break. So that is that long setup for Apple that you can see. Tesla, same, go back. Nice. When do they expire, Sim? Ooh, very nice. Tesla, same setup as all the other ones, belong up, except the idea that it is filling its gap to the downside, right? We're closing to yesterday's close. I don't see Tesla being actual again until we break the open. Anytime you're trading flat, I try to use the previous day's close and today's open as a pivot if I don't have hedge pressure or anything else. And Tesla just gapping up and trading down, fill its gap. It's not actionable down in here. While it does have bullish pressure, I don't want to take anything until it breaks through today's open price to push for highs. So sitting out on Tesla. I'd rather take like Apple or UNH rather than Tesla.
Last one, Matt,
Microsoft. All right. They're all going to look relatively the same since we're kind of circling in the same boat here of the, you know, the big top 10 pop stocks. So let me see. We got bull long up, actionable Microsoft 317.5 hedge pressure support. We are trading, we gapped up obviously from yesterday's close, and then we traded down to fill the gap and hit hedge pressure and supported. Microsoft a little late on this, but I would have longed right when we hit that dip early in the morning, about 10 minutes after market open, right at hedge pressure, just to hold, to trade back up today's open price. That's pretty decent R&R, about 1% move on Microsoft. I mean, sorry, yeah.
So that's really kind of like the core blocks we can go through type of the game, and you kind of get the game plan for what you're looking at through the day. So that sounds interesting. You can please check out the expert account shoot them a DM and we'll get you hooked up with a special deal. Looking right now at SPY, I just want to point something out real quick.
All right, you guys, y'all are all good on your things. Perfect. Tech support is amazing. I appreciate that, guys. It means a lot. There's that lightning round they had me do on Spaces. That's fun. Like, spit them out, Matt. He done prep me for that. I don't know what he's going to say. I just go as fast as he tells me to. That's how quickly, if you guys are noticing when I was just listening to you, I'm on Twitter Space right now. So what was I just doing? Was a segment that he created called Lightning Round, where he's just going to throw tickers at me and I'm going to spit out a trade plan as fast as possible. So what I do and draw on screen for you guys every morning, like with SPY, all those thoughts I put into it, that's me going quickly through, I guess, 10 stocks he gave me, and I'm going as fast as I can. So I'm liquidity map, trade plan, liquidity map, trade plan. The faster you do this in our style, the quicker you can do it. You notice how he's throwing tickers at me and I just open it up and say, nope, open it up, sit out, open it up flat, open it up slightly down, open it up slightly up. I don't open up and say, ooh, it's actual, let me take it, right? You get so quick at this, you can see it, and it's just that easy to think it over. So the more you practice, the more you can just blink your eyes and see it. Like normally I look at this and I can just see straight up what it's going to be. I look at resilience. Resilience is fighting at 0. That's why I'm not touching this today. It's not really clear. This is not a clear day. This is the reason I'm not doing much. It's going to take an hour or two, and wherever resilience stabilizes at, I'm going to take that side. So let this Friday pan out. We're going to let like an hour or two pan out. Let lunch happen. And let resilience pick a direction. And it's going to pick a direction and stay there. Right? You like Amazon hedge structure? Oh yeah, I love it. Love it. So that quick and dirty lightning round is like whenever you're going through your watch list, you want to see things and make sure everything lines up and looks good, right? I like that Sim took some 0-day SPY calls, so she's aggressively bullish today, which is good to see other folks out there in the general sense bullish. I'm just bullish. I'm not getting like a strong bull signal. Now Apple breaking up and trading higher is looking great. Apple as a gap and go is looking really solid for the play. Now again, not every day's action will looks good, so it's not really worth tapping. Plus, remember, keep in mind, friends. Keep in mind. This, right? This ends the day for the most part. The day trade is like, ugh, it's kind of dead, right? Get in queue really quick. So everything's working lightning smooth today, lightning fast. I love it. Is resilience the eighth wonder of the world? I know, right? It is by far. I always say it's my favorite indicator. You've always asked me, Matt, what is your favorite indicator? Resilience is my probably most clever invention, I think. Because it just is a combination. It's not like I accidentally stumbled into resilience. It's a combination of a journey to try to predict the S&P using the sum of the stocks underneath it, and not using traditional advanced decline type indications, which typically are very weak. As you see, resilience does not match price action all the time. It does inside the redistribution zone, but resilience in general doesn't necessarily care. As you see, look at in general right here, you see how this is advancing higher while this is chopping lower. It looks purely and solely at the stock's flux through their redistribution zone. The idea was, we used to teach class at open and close are some of your best pivots. Obviously it's high volume at open, high volume at close. Large support and resistance is there. When you hit those open and closes, you're going to pivot. So the idea was what happens in those three major points for a stock too. Here and here. A stock in the middle that's pressing higher is going to want to find sellers at that sell buffer. A stock sitting at the middle that presses lower is going to want to find buyers at that buy buffer, which are large volume spikes here and here. So what do you do if you were to create an indication that only cares about how sensitive the market is just inside of a range like that? So we're piecing together a way, okay, so predictability would be like, if every stock's in the middle, then resilience should be perfectly flat. If half the market cap goes up and half the market cap goes down, resilience should also be flat. If you push through here, resilience should move really rapidly. If you push from here to here, resilience would move very low. So just a small move through the middle is a big move on resilience, whereas a large move through the rest of the box is a smaller move, and then a move outside the box has no effect on resilience. That's kind of the key to making resilience work, is that as you are chopping through here in certain stocks, you're going to see the biggest change in resilience. If the stock market is just moving like straight up like this, resilience isn't going to go straight up and peg out. Resilience is going to stop moving at some point. Like if an example, here's the difference between us and like any advanced decline indicator. If the price were to just move just like this, your advanced decline would probably go up very quick and then peg out. But resilience would look like this. It would not care, not care, not care, start to care, care fast, etc. Not care, start to care fast, spike really quick. Yeah. It would look completely different. Not like anybody that says like, oh, this reminds me of trend, or this reminds me of advanced decline, didn't pass a fucking calculus class in their college in their community college they went to, because there's obviously a different order to that differential equation, the solution to these things. They have concavity differences. You can see that this concav down, this has concavity shift. The difference is the sensitivity. You don't care other than to balance the market at the balance point. You want to see if you're standing on a seesaw, you're a human being standing on a seesaw, and you're holding all the stocks that are slightly up here and all the stocks that are slightly down here. Which way does the seesaw start to tilt? That's all you're looking for. And that is exactly the balance point just right here. So resilience, and I even detail the math all the time because I'm very proud of it. It's something that is publicly discussed. So I really love resilience. I think people are so used to seeing technical analysis, especially technical indicators and technical gurus and stuff. They try to think everything is price action based. So in reality, as we share the math of how this works, it's pretty simple to see the difference. Like, so right now, when it is tethered to SPY like this, it just means that the market's all not deviating, doing anything spectacular. There's that second tap against NASDAQ, and then we do hit that bull zone bottom in UVXY. See that? There's that into the trade. Let's see if I can't do like a... I just actually need to test anyways, make sure futures are still working. MES. Let's make sure I can get one contract. Okay, good. Making sure future's still good after all these changes. This is not normally what I would be doing. I need to test something though. It's more likely to go down rather than up. And the resilience is positive. It should support there. I just need to make sure futures is still working. I need to continuously be testing these things. Yeah, it's always been working. I just need to make sure that we didn't break it too. Resilience is the arbitrage king when in RD zone. It really is like my favorite part of what we've made. Being pure arbitrage without just being based on price action. Like price action is not key. Like markets can, like here's an example, right? Like markets can trade down in a bull zone, you can trade up in a bear zone. What you really care to see is you want to see an indicator that only cares about certain pivots and is only sensitive in areas where the pivot should provide high volume. So like, you know, the opening price is always high volume. The close price is always high volume. The middle is a period of liquidity between bulls and bears. So when you have the two together, you want an indicator that's looking for what happens inside of this pit between bulls and bears. You want an indicator that's very sensitive right in the middle to tilt the scale one way or the other. To me, that's very important. So an indicator that doesn't care about anything other than this. That's kind of the magic of modern indicators. Most current indicators, and I call them garbage men, people that sell just indicator tools that are just nonsense. Some of them are really good. A lot of them are just kind of like the same old thing. They just cluster a bunch of indicators together, box it up, and sell it as a package. so that it looks new. In reality, a lot of those tools are just basic, simple math that looks at everything as being actionable. Like the modern indicator, like resilience, only cares about a certain region. There's an exclamation point. It only cares about a certain region. It's designed to be sensitive here and not work anywhere else. It's quickly. That sensitivity transform that's applied to it, the math thing, is what gives resilience its actionableness, right? As the market is chopping around, we didn't get a clear signal, so I didn't do much. Right now, resilience is positive, and I'm in like a short just to test it out. I don't think that's a good idea at all. But let me flatten this out. I made $7. Who wants a beer? I just need to make sure the Dom is still doing good. Please don't follow my trades. But the idea is that like the garbage men of the world, they don't even understand the tools they sell usually. They just usually use them and then decide to make a business out of it or whatever. Not really inventing anything new, just kind of reclustering what people have already made. And the problem is that even they don't understand what it is they're selling or doing. And the regurgitation effect is just not really teaching much. And I'll teach you. As a mathematician, traditional technical analysis looks at candle data. It grabs this array of data and does a math equation, a simple one, averages whatever it is, and creates a tool, or looks for patterns like the shape of this and draws triangles and squares on your chart, Elliott waves and harmonics of the sort to try to create some kind of effect to predict tomorrow's or next price action based on the oscillatory behavior of the noise of the market. It's like staring. It's like that scene in Beautiful Mind where Russell Crowe is dropping a handful of bird food on the ground, watching a bunch of pigeons fight over it, and he's scribbling on a piece of paper an algorithm that can discuss how they fight for breadcrumbs. And so I come up with some math equation to it. You're literally trying to derive logic from what's pure chaos and competition, and it's stupid and impossible to do so. You made a general, John Nash made a general Nash equilibrium. It's a generalized competitive practice, which is very, very smart conclusion, but it's not predictable to the unit degree. You can predict a single battle that it's likely, or so you can come up with great outcomes in a single battle. But when 3, 4, 5, 6 people are competing against each other, there is no equilibrium. There's no math to be found to sort out that noise. Most things like Elliott waves and harmonics and all the stuff that's typically here, you have to be careful because really what it's doing is trying to sift through the noise to find patterns of shape. This is a shape. Here's an angle. Here's a shape. It's going to prove that this is going to happen tomorrow. Zero market-making computers look at charts. 0% of them. Nobody looks at charts. 0 people. Computational mechanism side of typical trading computers run markets are looking at order flow and supply and demand. It's very simple how they do it. Nobody cares about the shape of the chart. You're trying to weed out noise, you're just gonna have a bad time. So a lot of that stuff really doesn't, and it's actionable all the time, no matter what price does. It's not, well, there's no logic behind it. It's just applying math all the time. The logic behind here is that if all the stocks have open and close, have high volume, then in the middle, you have a buffer of buyers or sellers on either side of you. And if the S&P is designed to track the sum of the stocks and SPY's tracking the S&P, then if all the stocks are in the middle and start fluxing upward, they're going to look for sellers right here. And if you snap your fingers to find the next batch of sellers as dealers raise price to find sellers, you will go to the close price. Therefore, you can theoretically calculate what the S&P should be valued at if all the stocks were to simultaneously fill their gap from the box. You can compare that to the current value of the SPY, and now you have arbitrage opportunity. And that's where resilience is powerful. It's all of that together. It's not just price goes up, here it goes. This is the momentum, or this is the shape, here's the next shape. It's a very logical conclusion to the rubber band that ties SPY to the SPX with the literal iron rod that ties SPX to the sum of the stocks. This thing can trade on its own and deviate a little bit. What are the stocks doing between two very strong high volume pivots? That's it. And then not let the indicator do much outside of that. That's why I love resilience, because it's mathematical harmony. It's a very beautiful solution to a thing that you'll see every day in trading. You always deal with open and close in trading. So it's a common indicator you can use all the time. Every day you'll be using it. And it's great at what it does. I use it, I call it the Swiss Army knife because I use it for so many different mechanisms. I use it to help predict direction. I use it to help pick trades. I use it to help get out of a trade when I'm wrong. Why did I close my short with $8 profit? Because resilience is not negative. I know that we're likely to flux up in here. Why did I take a short? Well, because we hit UVXY, and that's always going to create volatility. Everybody understand that rule, right? God, all of our rules are just popping up today. I love it. So you gotta be careful with indicators that try to work all the time, because that's just really silly. Not every point in the market is actionable or worth anything. And that's what we try to teach here as well. Only certain pivots really matter. You need to design indicators that are localized around those pivots and they work better around them. And they're not sensitive away from them. Here's UVXY bulls on bottom. Here's that ticking time bomb that creates volatility. We talk about this all the time. Small v, small v, small v, big V, small v. Does everybody see the volatility explosion? Type yes if you see it. Throw in some fire emojis in chat. You'll see that, right? You love my picks? Oh, yeah. Isn't that crazy, right? Isn't that crazy that we teach this mechanism on how volatility can suddenly expand when VIX hits a pivot at the bottom? Isn't that cool? We popped above, we opened below hedge pressure. We're likely to be below hedge pressure. We popped above hedge pressure. VIX hit a support. I just threw in a micro short just to scalp down and take some profit. I didn't even do anything big on that. And we're mean reversion. Resilience is strong enough to float us this way. Hedge pressure resistance strong enough to keep us down here. Resilience is positive, so I'm literally not trading anything beyond there. I just recognize quick opportunity. I need to test micros anyways. Day one of small account challenge, baby. Okay. Like I'm looking today, I'm just thinking that the market's ready to still figure itself out. It's not a thing I want to take a big trade on today. If you were to put a gun in my head and make me make a call, here's that DD run as well. Remember, touch the bull side, and then that's resistance. Oh, that was the other part of that equation as well. DD ratio, bullish, open, and bear zone. You kiss the bull zone and then back to bear zone. God, it's so good. Kiss that bull zone, come right back. That was another, all of it lined up, right? I love that. Open and middle, there's the bull zone tap. Open and middle, there's the bull zone tap on DD. All of our rules play out very often. High probability runs. DD is bullish, rational market, middle taps the top, middle taps the top. How cool is this? I don't know why people ever even cancel our service if they ever join up. Repeatability to me, I would pay for a tool set that had repeatable things that I can just lock up and keep on pocket. I would buy everybody that had a repeatable thing. Even if it's like one trick that works every 1 or 2 weeks, I would keep them all in my pocket and learn them all. This is very repeatable. Resilience is positive, so we're pushing up through the zone. Like you said, half gap is support. Resilience is positive support. Hedge pressure is resistance. Mean reversion is balance in the middle. So, you know, that's probably the one action point. The only reason I liked the short was the idea we had that VIX resistance there. That little bounce off of VIX allowed the market to reset and then not be volatile anymore. Now it's going to have to slowly fight its way somewhere. It's going to take an hour or two for this to pick a direction. Been doing it for a while, right? You guys know how that works. All right. Yeah, it's hard to say, Charles. If you hit the bull zone a second time, would likely reject it. Typically, I only take the first instance of one of our rules. I don't like to take subsequent taps to be meaningful. I like to be the first one to see something and be done. I don't know statistics on what's the probability of trying it again. I think that that would be more like noise and random. The first one's always the most prominent one. So the question is, what happens here? If it's making multiple attempts for the bull zone, I'd be more inclined to think it's going to try to push. But the problem is I don't take that trade anyways. So is it like appropriate from here to still try to short it down to there, or actually to there for as current zero? The answer I would say is maybe. But was this a better entry than that? Is this a higher probability, less probability? That part I don't know. I would just treat it like it's the same trade. Honestly, these kind of trades are scalps, get in and get out anyways. But yeah, it's like, what happens if you tap hedge pressure a third or fourth or fifth time? Is it stronger? I like to say this. I don't ever do things like that. Like, is a double bottom or a triple bottom or quadruple bottom mean the support is better? That's nonsense. What I do say is that if you have two environments with VIX. VIX will tell you all the answers, right? You're either up here or you're down here. Down here, you're going to have sharp pivots. You want it to move quick. VIX is up here, you're going to have loose pivots. This is the environment we're in now, okay? What's the definition of loose and sharp? Well, if I were to hit hedge pressure in a sharp pivot zone, I want it to pivot very quick. I'm talking within 5 minutes. Hit it, turn around. I want it to maybe hit it, test it again, and then turn around. Sharp is like two max taps. If it doesn't move after 2 taps, it's not sharp enough. You got it? What's the definition of loose? There isn't one. Loose is loose. It can fight all day at hedge pressure and then finally make a decision. We are trading in loose environment because of the triple B number. We all know how that works, right? So how do you quantitatively define loose? Here's the triple B. We're trading in a volatility increasing environment. So pivots are going to be overshooting a lot. So what is considered loose? How many times is it going to hit this hedge pressure before it rejects? 1, 2, 3, 4. There is no quantifiable number. There's no rule of thumb on loose. So you have to just pick a side and stick with it and build a position as it bounces through that overshoot to make your entry slightly better. Like if I was late to the trade and I shorted right here and it bounced higher, I'd be like, okay, I'm in the same trade. Let me short right there as well and get a higher cost basis. So in the period of loose pivots, I'd take everything with a grain of salt. Hitting something 3, 4, 5, 6, 10 times doesn't do anything but tell me it's just the noise of volatility. And that's a great question, Charles. In a below triple B or sharp pivots environment, a second tap is usually a confirmation. Like if you break through hedge pressure attempting twice today in a sharp pivot environment, this side would be right along it, right? It usually is a 1 tap and go, if most a second tap. But, you know, if it doesn't happen by the second time, then it's not going to happen. This being a loose overshoot environment, it's hard to determine if this is just noise or break. That's what makes trading in volatile environments a little harder. You're more like have to take a gamble and stick with it. You have your decision you make. Am I bullish or bearish? You just take the trade and you ignore the noise. And that's where a lot of technicals fail as well, is they're always trying to make the same assessment. We divide the market into 2 discrete environments. You have a tight environment and a loose environment. We are currently trading in the loose environment, which means I need to be more patient with the position. I need to trade smaller with the position. I need to understand that we're going to overshoot if I went a long or short. I'm going to need to see very strong confluence to pick a direction on a directional move. That's bullish. That's bullish. The middle of mean reversion is likely to press in there. I don't have anything else to go off of. Are we rejecting hedge pressure? We still could be. This could just be noise, volatility. If VIX gets down in here, I'm no longer going to believe it's noise of volatility that would be supporting a move to the upside. So what makes our stuff also stronger is that we can divide the market into 2 regimes. I analyze the market differently based on those 2 regimes. I took advantage of the volatility and just made a quick scalp. I knew it was volatility. I'm not scalping for a reversal. Now they have futures when I have DD band break for VIX as an alert, because VIX does not have DD bands. There you go. All right. The market's looking pretty clean today. Upside break on hedge pressure, pushing the bull side. VIX is down here, like I mentioned earlier. Pretty decent. You have DD bands and futures coming right up, so that's kind of the next step. I'm glad to see like the platform starting to come together more and more every day. This makes me very happy. That's what it's doing. Nasdaq breaking outside of DD band. Where's DD? Where's my DD? DD band? Oh, that's interesting. All right, guys, I'm gonna call it. We'll be back at 12 to do a Zoom call. I love you guys. Thanks for tuning in. Feel free to follow us on Twitter. Feel free to like the stream and subscribe to the channel. Don't forget, subscribe to the channel. We're live every morning. Join our Discord. Link is in the description below. go to the Ask for Help section and get a chance to take a look at Rocket Secure, see what's going on. We'd love to show you. We're doing this really awesome special. You can try it out for 3 months, $35 a month. Get all your data feeds, full platform, live trading, everything comes with this. It's only $200. You guys can get really awesome deals off of that. We're glad to share the platform with you as we're growing, getting bigger. It's just great to see our community get bigger every single day. We're growing like wildfires. It's great. We're glad the support of this community. It's an awesome group here, and let's let positional risk analysis be the future of market analysis, because that's exactly what we are. We're adding a rocket to everyone's scooter. Is you tired of pedaling through the markets with your feet like Fred Flintstone? Time to get up to the modern age. We'll turn your little stone foot pedal car into a rocket ship and take you to the moon. Modern tools. The modern trader. See you later.